Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, and I'm joined by my co-host Kevin Hinks. But let's bring in our next guest, and that's going to be Landon Swan, the co-founder of LikeFolio.com. Thanks for joining us, Landon.
Good to be here. Rough day in the markets.
Oh, big rough day in the markets. Rough month in the markets here, Landon. But we're talking discount retailers. We had the Kohl's news that came out today. We've got Nordstrom up, Macy's up on the back of that. Kohl's up over 30% on the day. But we're talking discount retailers now. In an inflationary environment, or maybe people aren't saving as much and maybe they don't have as much free cash to spend, are these companies doing well as far as your sentiment and data goes, with the expectations that, hey, wages aren't rising as fast as inflation, so maybe we'll start going to these cheaper alternatives?
Yeah, I think you have to think about these companies as a potential investment, just sort of as a defensive play. I mean, if you look across the markets, all the companies are getting, a lot of companies are getting killed, SPY's down tremendously, and these companies are doing fairly well. I mean, they're not all Kohl's, they're not all doing that well, but they're, relative to the market, these companies are generally doing fairly well in this market. And so I think a lot of it has to do, just like you talked about, inflation. I think that the number being quoted is around 7%. I'd take the over on that. I think everything is just going up tremendously. You look at just the sentiment of people, talking about concerns of inflation. And this is an incredible chart. I mean, it's been over a year now where people have been increasingly concerned about the amount of inflation coming into these markets, just into the economy in general. And now we're really starting to pay the price. And so as long as this continues to go up, it's on people's minds, which means that I do think that they're looking for the deals. They're looking for a way to spend less money. And, one of the best ways to do that is go to a discount retailer. So these companies are actually doing fairly well. I will say that, when you look at how they're doing on a purchase intent basis, quarter over quarter, there's mixed results. You've got some winners, you've got some losers. Most of the companies are down on a year-over-year basis for purchase intent, even down since 2019 on a two-year basis. I guess 2020, since we're in 2022 now. But anyway, you get my point. Two-year basis, they're still down. And so it's tough across the board. And, if I had to say one of them that I like the most, Five Below is probably it. It's got the highest happiness of all of them at 77%. People really like this company. And the purchase intent, as you can see, it's at the top of the chart. Kohl's, as you talked about earlier, they're doing extremely well on purchase intent as well. But from moving forward, I would say Five Below is probably my favorite pickup here. At these prices, I think it's going to outperform the rest of the sector. But I do think, just like you're talking about, I do think this is a sector that could be a bit of a defensive play because, dollar needs to go further. People are thinking about how to do that. And I tell you what, every day that the market trades like this, these companies get more customers because this is really painful for a lot of people.
Landon, the more I dive into this company, the more impressive this company looks to me, and that's Five Below. And here's why. They focus on 10 to 13-year-olds, and they focus on low price, which may be that inflation-proof kind of store that you talk about. But they also do seasonal things. And if you think of seasonal items to buy, there's basically one every month, right? As we get into February, it's Valentine's Day, then it's St. Patrick's Day, a personal favorite of mine. And then it goes to Easter, then it goes to, summer and all these different things. And here's the thing and you think that's good. You think that's impressive? In 2011, they had 192 stores. Last quarter, they have 1,173. Here's why. These stores cost $300,000 to open, Landon. $300,000. Each store kicks out revenue of $2 million. You know how many times you do that? Forever. You do it. You do it as quickly as you possibly can. And oh, by the way, here's the best part. They do this for no debt. They take on no debt when they do this. So in the rough that is a lot of retailers and the old U.S. economy, Landon, is this like a diamond sitting in the rough, down with the rest of the market today, getting oversold? But this has nothing but good news, Landon.
I tell you what, Kevin, I did not know those stats that you threw out. 300,000 to make a store and it kicks out $2 million in revenue. That is unbelievable.
Yeah.
So yeah, it makes sense that they don't have.
That's crazy.
Why would they need debt? They're printing money at, what is that, a rate of 6.5, 7 to 1 on just that first year. So yeah, they should be opening up as many as they can. And what's great is, I mean, people love these stores. I mean, this is not your Dollar General, Dollar Tree type store. Those are, 58 and 60% happiness. Those are very low. There's a different kind of mentality with those kind of stores. But Five Below is something that you can go in and it's just kind of fun. Like maybe you go in there and you pick up some things that you didn't expect to pick up. You're not going there for something in particular usually. You're just kind of walking around and picking things up. And so, they get that sort of deal discovery. They get that, walk around and just grab something type customer. And I do think that is more inflation proof, right? I think that kind of spending is unlikely to go away, because even though it's sort of frivolous and maybe you don't need to buy these things, they're so cheap that you can justify it. It's like, well, it's only $5 for this or whatever. So I do like this company a lot. And you can see before inflation, before the market crash here, deal discovery was on the rise. It's getting near all-time highs now, and so it's on people's minds. So in general, all of these discount retailers, I think, are well positioned to take care of it, take advantage of this type of market, this type of situation, even if they have to bump up prices. I mean, we all know that Five Below is not $5 and below anymore. I think they have now things up in the $9 range. Dollar Tree just went from $1 to $1.25. I mean, you can't fight that. You have to go with inflation, but it's still really, really cheap. I think that's the point. And so people are looking for deals, and this is where they're going to spend their money. And in this market, it's tough to find a diamond in the rough. I'm not going all in on Five Below, but I do like it very much, especially in this market compared to its peers, who are also, I think, also well positioned.
Yeah, and if you look at this, your data, Landon, do you guys have anything current where consumer sentiment and consumer confidence have been waning over the last month and a half since the market hit all-time highs? Are you seeing any recent data points that's pointing to, hey, maybe Five Below and Dollar Tree and Kohl's will do well, or maybe better than their peers, but we're starting to see a slide across the board in every metric as far as retail goes, as inflation has picked up to 40-year highs?
Yeah, I think you could say that. You can make that argument. Purchase intent has not been strong, generally just across the board for companies that we track. I mean, it's been sliding for the last couple of months or so. So we are concerned with that. I'm not trying to call a bottom here. I don't think we're there yet. For me, if the way to call a market bottom is when the person who never talks about the stock market comes up to you and asks you, should I sell? That's generally when the market bottom is. I haven't had that person yet come to me, so I'm waiting to see. But overall, I do think that there is a concern in the economy where things are slowing down. I think these are some of the exceptional companies where that's not happening. Five Below plus 30% purchase intent quarter over quarter. That's very strong, especially in this kind of market. So I do think that this is people are being driven to deal discovery, cheaper prices, and just like I said, the more this continues, the more there's going to be people looking for that. So with this inflation where it's at, I do like this sector in general, and I'd like to tend to pick one company who's going to excel within a winning sector, and for me, that's Five Below.
Landon, a quick question here, away from Five Below slightly and more to your data on inflation fears and things like that. Do you you and I have talked on the phone with Tom, or on the show with Tom before, and we cover fear often in several different topics. What is the number one fear factor that you're getting at LikeFolio? Is it inflation? Is it the overall market? Is it valuations? What are you guys seeing from a macro level on the overall market in terms of the things that you measure?
Sure. So, it used to be COVID, right? That used to be a big thing that scared people. Yeah. That is decreasing significantly. I think inflation is one of the top things, but we also measure just general investor fear. So it's sort of like a VIX component almost, right? Where you can say, I'm scared of the market, I'm selling, or whatever it may be. That is extremely high levels, as you can imagine right now. But I think that's more trading specific. But if you go back to just sort of consumer macro, I think inflation is the one that has been concerning. And this chart is interesting because if you cut it off in the middle of 2021, it looks kind of like a hockey stick even then. But then when you zoom out and it goes up even further, we've still got this incredible hockey stick going. So people are very concerned about inflation, and you can see it. It's one of those things that just it's in your face all the time. You go to the supermarket and everything's just a little bit more. The gas is just a little bit more. Everywhere you go, prices are going up. And if your wages are not going up, then you're starting to wonder, all right, how am I going to get through this? Where am I going to go with my money? So I think macro level, I think inflation is the big one, and it's tough because this is not a surprise to people who've been paying attention. You know, they've been printing money like crazy over the last 2 years, and so now we're starting to pay the price. And I don't know where we're going, but I would tell you right now, I would say inflation is the number one concern for consumers.
Yeah, the Fed wanted inflation to run hot, Landon. They got it, and then some, I think. Maybe a little bit too hot here as concerns continue to wane on that inflation front. All right, great stuff. As always, Landon, appreciate it. Have a great day.
All right, thanks a lot, guys. Take care.
All right, that's Landon Swan, the co-founder of LikeFolio.com. But Kevin,